It's just good stuff. But yeah, how would you define the dynamic between the two of you?
I'm definitely the asshole of the two. I will try to like be the prick that tries to get people, dig deeper in their thoughts and challenge them a little bit. I think Namik is the smarter, plugged in DGen character, whereas I'm the media retard.
I definitely wouldn't say I'm the smarter one here. That's definitely false. But I do think it'll be a bit more like I'll be like easygoing, lighter.
Okay, so Larry's the prick. Namik's young. He's more energetic. Larry's just like, oh, this is
Exactly. Yeah, I've been in the industry for so
What are
fucking
you
long.
talking about? Oh my god.
Building another layer 2.
Building another
Trading,
layer
yeah.
2. Those fucking layer 2 scammers.
Yeah, basically no layer 2 trading above 5 billion.
We don't talk about that.
We don't talk about that. You guys are no layer 2. Yeah, I remember the pitch. It's layer 1. Don't mention. No.
Jordi says he needs 10 minutes.
Okay. Well,
Do you want to start and then like he can come in when he comes in? We can just say that Jordi's an asshole. He's super late.
We can. I mean, this should be a little bit more of a casual conversation. Like, we don't want this to be read off the script.
Okay. Let's start then.
All right.
Hello and welcome to the Big Brain Podcast. I'm your co-host, Larry Cermak, CEO of The Block, and joining me is my co-host, Namik, Chief Strategy Officer at MegaETH.
We're supposed to have two poker players turned VCs. Only one actually showed up on time.
One of them bluffed you.
Haseeb, introduce yourself.
Yes, I'm Haseeb, managing partner at Dragonfly, which is a global crypto investment firm. And I'm also a podcaster and influencer on The Chopping Block, which is on the Onchain podcast.
Are you worried that we're going to come and take your fun there?
I'm here to make sure that you guys don't get off the ground. So the goal is to sync this podcast, first episode, one and done.
Yeah, so far you're doing great. So just keep going.
I think honestly, Jordi is doing more to sync this podcast than I am. So I would say, put it on Jordi, not on me.
I think everyone that has been in the industry knows that you started as a poker player. Can you just quickly walk us through the journey, of just going from poker to crypto?
I think there's a lot of similarities between poker and crypto. Ironically, there's not a lot of similarities between venture and poker. And so I think being on the venture side is pretty atypical for a lot of the poker players. Most of the folks I know, they ended up either on the trading side, which is very, very common, or ending up, a few of them on the builder side, and end up being entrepreneurs. VCs, there's very, very few professional poker players who end up in VC. I think in many ways, the similarities, one, in order to get into crypto, especially get into crypto early, you had to be somebody who wasn't afraid of finding small edges that are somewhat subversive, right? So it's like back in the day, getting into crypto in 2017, 2018, 2019, it was the kind of thing that your parents wouldn't really be proud of you for doing. Your friends would kind of look at you a little weird and be like, hey, why, you had such a great promising career. Why did you decide to go into this scammy crypto thing? Now it's a different story. Right now, Coinbase is a public company and BlackRock and all this stuff, right? I mean, maybe Trump is making crypto going back to its roots of being scammy, but at least in relative to what it was like before, crypto at this point is like a very august career path if you choose to take it. At the time, it really wasn't. So the people who were getting into crypto at that time, they were really kind of weird, or they were not afraid of looking weird. The other thing about crypto is that, like poker, very male dominated, very young, and people who have abnormally high risk appetite and are kind of, again, off the beaten path with respect to, they're people who are extremely online, they're staying up late at night, they're just kind of in this more chaotic environment, and they're not expecting to have a very linear career path, right? That is part and parcel of what crypto culture is like. Again, it's institutionalizing more now, but if you think about with the part of crypto where you guys and ourselves, me and Jordi, came up, that was really what it was like, which is very much like the early Wild West days of poker. So those are a lot of the commonalities, and then of course the fact that you have to be able to stomach big swings, right? If you're in crypto for long enough, you're just going to get punched in the face at some point. You know, whether it's the FTX boom, whether it's, you know, COVID, whether it was, you know, the 2017 ICO collapse, all of that stuff, like you just have to be willing to look stupid to the people around you. And you have to be willing to just kind of have enough, you know, emotional fortitude to get through crazy, crazy ups and downs. I think that's part and parcel of what people who've gotten through crypto have had to is selected for that, right? I know so many people who came into crypto in 2017, 2018, and they're gone. They just left. They just couldn't stomach it. They were like, look, they need their career path to be this like line that just, you know, every single year they're making progress in one direction. And if you're in crypto, you don't get to say that. You don't get to have that. Very few people have the constitution to be able to stomach something like that. And it comes either from one, being a crazy cypherpunk, libertarian, whatever, like you have some underlying conviction that this is the way the world is going, or that it's less philosophical and more just like stubbornness, you know? And I think you see one of those two things being the characteristic that led people to survive in crypto for long enough. Either they just really fucking believe and they're just cypherpunks to their core, or they're just really stubborn. And I'd say I'm more the latter, is that I think I'm just really stubborn, you know, is that even when all this stuff was collapsing, I was like, no, this is good. Like, I know it's going to happen. I can just tell I'm not wrong. It's definitely going to happen. And I'm going to prove it to you guys.
What were your lowest moments, right? Like, I think you're right in the way that we go through highs and lows as an industry. For me, I think I actually lean more towards like this like libertarian point of view, where like for me, like with my upbringing, I'm not American, grew up in emerging markets. I kind of saw this as like an inevitable outcome of like how like hegemonies will change, right? And you need an alternative economic system. But like I've had some lows in crypto, right? When I'm like, Jesus Christ, all of my friends are in banking. You know, Bitcoin is nuking, right? Like, what have I done? I stuck through it because I know this will happen. But I'm curious, what were some of your like lowest moments in crypto?
And to add on to that, have you ever questioned your conviction, where you were like, "Oh fuck, maybe I'm wrong, and I should just go back to poker"?
Well, it wasn't going back to poker. I was in tech at the time that I came into crypto. Honestly, when FTX collapsed, I actually did not question my conviction into crypto. This is the moment, I think, for a lot of people that really shook their faith. But for me, I was like, oh, wow, I don't know why the market is melting down this much, but like the third largest exchange was a scammer. Like, okay, whatever, you know, like that sucks. It's really terrible. But like we didn't invest in FTX. We passed it every round. And so that actually didn't shake my faith. And then the COVID collapse, also, I was like, well, the whole world was collapsing, right? So it wasn't idiosyncratic to us. When the ICO bubble collapsed, that actually really did shake my faith. And
Look, you made it.
What do you know? We've got the final guest. Hey, Jordi, I'm really glad you could join us.
I'm glad to be here finally. Sorry about that.
Yeah, thanks for ruining the inaugural episode of the show.
You gotta
be fashionably late.
Yeah, exactly.
Yeah, extremely fashionable in your t-shirt. Anyway, I was regaling them with the stories of how I nearly lost my faith. But actually, 2018, when the ICO bubble collapsed, I really did have my my faith shook. And I was wondering, I remember it was like Thanksgiving 2018. And I was on vacation with some friends of mine. And I was just like, I really wasn't sure that Bitcoin was going to be a thing, that this wasn't all this fever dream that we'd all agreed to see. And at that time, there were no applications. You know, like stable coins were like $1 billion of stable coins, mostly used for crypto trading. And there was no DeFi, you know, MakerDAO was this tiny little nothing at that time. So it was really, and you know, there was all, people were talking about IoT and tokenizing apartment complexes and just all this stuff that wasn't happening. Nothing was real. It was all just vaporware. And it was obvious to everybody that none of this stuff had come true. You know, the only thing was like maybe Bitcoin and maybe smart contracts someday, you know? And at that point, I really wasn't sure that I had made a mistake in coming into crypto. But that's the last time that I've had my faith shaken.
And did you end up using that? Like, obviously, a lot of VCs make the greatest investments when the faith is a little shook, right? Like when you have the best opportunities, there's not that much raising going on. Did you double down on that fear and just go in, with more conviction, or how did you kind of overcome that?
I mean, so we did, de facto, we made a lot of great investments at that time. And in reality, you don't really have a choice because, if you're a fund manager, your job is to invest. And so we kept investing and we kept looking at things that we thought, look, let's assume that crypto will come back. Let's assume that this industry will be real. Let's assume that Bitcoin and Ethereum and all the stories we're telling, let's assume they'll come true. Because if they don't, we're fucked anyway. So, like what else is there to do besides, bet on the upside? And so I think it was by probably like mid 2019 that I started to gain confidence again. And that was really when we started investing into, Compound and MakerDAO and DYDX and all this stuff. That's when we started making those investments and seeing the rise of DeFi. I started to become more and more confident that no, this stuff is real. This actually will come back. And you can start to see, the market had bottomed and it started to return. And you started to see builders really experimenting with DeFi. And the thing that I think clicked for me at that time was that when we started to see DeFi work, right? The reality, when I say work, it means like work with a TVL of like $20 million, compared to what we look at today, nothing numbers. These were tiny, tiny, tiny. But the thing that I kept telling people on my team is that if this thing works with $20 million, like the math doesn't change when you add 2 zeros on the end. It's exactly the same, right? If it works with 20 million, it works with 2 billion. It works with 20 billion, right? So it's at this point just a matter of scaling up. But if it works at this scale, it's going to work at bigger scales too. That to me was like, this thing is going to be real. I don't know how long it's going to take. It could take 10 years for this stuff to get big. Turned out it took 2 years for this stuff to get big. But that was when I was like, no. There's no going back. Both stablecoins and DeFi are going to be enormous. And a lot of my team at that time was losing faith. And we had, I remember having sit down with one of my analysts and basically tell him like, look, he was thinking about going back to banking. He used to work at BlackRock. And I was like, no, dude, this is like, do you really think that a permissionless dollar on chain is not going to be the most viral product ever invented? Of course it is. Like, look, it's tiny right now. I grant you, it's absolutely tiny. But there's only one way this thing is going to go, and that's up. So COVID was this huge accelerant that just completely changed the conversation around crypto. And after that, for me, there was no real looking back. Since then, I've had total confidence that crypto is going to take over the world.
Jordi, thanks for joining. Quick question for you, similar to Haseeb. Has there been anything that ever like shook your faith in crypto since you joined? And has there been anything that like really reaffirmed that, you're right and that you should be in the industry?
Certainly, like after FTX went down, that was a moment where at least the people in my space, like the more trading, market makers, like a lot of them exited, Citadel and, Jump took a backseat. Like everyone was looking at the regulatory risk versus the, investment upside, the trading upside, and not liking the balance. So having looked at it, I decided that it's always going to at least be good for speculation. Like we have a floor. There's a floor there. And if we're one of the few firms that are doing the best, as long as there's a floor, we'll still be fine. And the rest is upside. Like it can go a lot better than just speculation, but it's a great casino because people just around the world permissionlessly speculate on things and bet on, colorful dogs or whatever, like whatever it is, doesn't really matter. So at that point I decided, there's like this meme, like, if he has 1,000 fans and I'm one of them, and if he has one fan, it's me, and if there is no fans, then I'm dead. It was I kind of just kind of decided that was like how Selene was gonna approach crypto, and just we're all in, and that's it. It'll always be at least enough.
Larry, what about you?
Honestly, similar to Haseeb, I think like my lowest point was 2017 when I was just like looking at the industry. I joined late 2016, but 2017 I was just like, what the fuck? Like none of this is real. All of this is made up bullshit. Like no activity is real. Everyone's faking it. ICOs are like everything is just speculation and propped up. And it was obvious to me that things are gonna collapse. And similar to Haseeb, I wasn't sure if like things would actually come back. But and at that time as well, I didn't have great faith in Tether at the time. Like there was just so many questionable things happening. So I remember I was like, well, this is the largest stablecoin. There's a lot of shitty things going on. They're not compliant at all. And on top of that, you have all these ICOs, made up valuations. All that is going to go to zero. And a lot of people are going to lose money because a lot of the ICO participants, or even the secondary buyers, were just retail people who are buying up backs of people who bought the ICO. So I was not sure at that time, and I was actually early on in my career. I was known as the skeptic of the not of crypto, but of most of crypto, I would say. Even with Bitcoin, like my fundamental issue at the time was that eventually there's going to be issues with the max supply, and I still have some of these concerns. So I think they're smaller than they were at the time, but and since then, obviously, Tether has also become significantly more compliant and significantly more trustworthy, and a lot of that has been cleared up. But that was definitely my lowest point. And then, FTX, I was sure that crypto would survive, but it just shook my faith from the perspective of like, this industry is like supposed to be as transparent as possible. I've known so many of people at FTX. I talked to Sam so many times. I went to dinner with Sam. And like I had no idea, like as one of the leading analysts in the industry, like that's fucked up. So that shook my faith more so on the personal belief in myself versus the crypto space. Because it was inconceivable to me that, knowing so many people, as well as like, constantly looking at on-chain data, constantly looking at everything in the industry, not knowing that there could be something like that happening was eye-opening for me. Whereas like a lot of the crypto scams before were kind of obvious to me, right? Like everything else that collapsed before, I was like, okay, well, I saw that coming. I'm like, I'm so smart. And then when FTX happened, I'm like, oh, holy fuck, like so that shook my faith. And obviously, the block was also like relatively directly implicated in that because the last CEO had some loans from the old CEO, so from the CEO of FTX, from Sam. So that was a hard time for the block and myself, largely because of just kind of questioning my ability to even like recognize if something is fraud or not. And what I like still kind of take almost offensively is when people say, well, it was obvious that FTX was fraudulent. It was obvious that Sam was a scammer. Like I still think to this day that it was not possible to tell that there was something wrong. You could maybe like decide that there were like some red flags, but there were red flags with everything, with Binance, with Tether, with like so many projects in crypto. So that was it for me.
So this is a bit spicy because the C passed on every single FTX round. So he must have seen something. Tell us.
Yeah, I mean, so what I would say is that we could tell that what FTX was doing was very weird.
Yeah.
Right. That doesn't mean that we thought that they were stealing their customers' money. Like we did not think that. I mean, I can't think of a single exchange that I would say I think they're stealing their customers' money, except maybe like Quadriga or something, But in the case of FTX, clearly what they were doing was very strange.
Yeah.
And that came out, and the reason why we didn't invest into FTX, like for example, if you look at their Series D or whatever when they raised at the $40 billion valuation, they were spending almost all their money in the US, right? They were buying, the Miami Heat Stadium and all the Super Bowl ads, and I remember billboards all over SF with Sam's face on them. And the thing that was so weird about that was that despite the fact they were a global exchange, they had almost no market share in the US, right? If you even look at the bankruptcy, vast majority of the bankruptcy, like the assets, were overseas, and almost all their money they were making overseas. So why were they spending all their money in the US? Doesn't make any sense. We invest a lot in exchanges. They don't do that. That's fucking nonsense, right? Like one of the most important thing an exchange does is optimize their marketing spend. So there's a lot of things like that were these sort of breadcrumbs along the way that if you realize FTX's real business model, which they obviously realized, was raising money from American investors, for which it really helps to have the Miami Heat Stadium and billboards all over San Francisco in order to go raise your next round from all these institutional investors, even though they were making their money in Korea and Singapore and all these places.
I'll push back a little bit just because
I want to
okay,
push
give
back
it to me,
too, but I'll let you go,
come on.
Jordi.
Okay.
Push back.
So like, living in Asia and talking, seeing the Korean culture and a lot of the Chinese culture, other cultures, if they see like a brand name in the US appearing, it works for them too. Like they're on the international exchange, even if the marketing spend is in the US, because they look up to the US so much that, their cultural direction is driven from there. So actually, I think, being in the space at the time, trading a lot, and like being in the trenches with all the traders, everybody was trading on FTX because the culture was like, okay, this is not an Asian exchange, like this is a US
Yeah.
cool thing. It's like Hollywood. So I think that part they actually did right.
I think they did it right too. Personally, the reason why I liked FTX was because they were just pushing so many things, and they seemed like they were at least trying to be compliant. Whereas like Binance would like immediately exit the US market when there were some small issues with the Binance US exchange, and OKX did too to some extent. It was like the only one that was trying. And what I was gonna push back on a little bit is that like basically everything you just said, Haseeb, could also be applied to other exchanges in the industry. Like Crypto.com is one example. How many customers do they have in the US? I mean, they own the
Crypto.com
naming rights
apparently
to
has a
the.
lot of customers in the US, actually. Which I
But
don't
it's
spend a,
it's very questionable, right? Like you look at their volumes, and it's like insanely inflated, in my opinion, based on what is actually realistic. And
yeah, it's hard to tell what their
it's
actual
hard to
volumes
tell.
are. It's hard to tell. But
Yeah,
look, I'll say this. I think this is a bit of revisionist history you guys are giving here, because for one, like Binance obviously has dominant market share in most countries. Binance was not
yeah,
doing any of this shit in the US, and Binance US was bigger than FTX US at the time that FTX US collapsed. So Binance US wasn't doing any of this stuff. They had more domestic market share in the US. They had more international market share. It may well have been true that, yes, there was a halo effect from doing the Miami Heat Stadium stuff. There's no halo effect from getting fucking billboards in San Francisco, right? Like the way in which he was peppering everything in the US and the way he was going in front of Congress and doing all this stuff, like it was a broader strategy to present FTX as institutional when it obviously wasn't, right? These guys were in
yeah.
the Bahamas and they were running this exchange basically on like, a foundation built out of toothpicks. So I think that this was very intentional. And the second thing I'll say, it's like to back me up further on this, one thing that you realize about Binance, and this has been true for a very long time, Binance is very aggressive, right? Everybody talks about how they get their pound of flesh every time someone gets listed on Binance. But the thing that they don't acknowledge about Binance is that they do it for their customers, right? They take this pound of flesh and they give it to BNB holders, and they make sure that BNB holders make money. They've been doing this for a fucking decade, right? Like everybody knows the game. It's been true always about Binance. FTX was the opposite. FTX was the one place where you would come to FTX, they'd list a new token, and they would dump it on you. And retail would get fucked on every fucking exchange listing on FTX, right? And we all knew that. Everybody who interacted with FTX knew that. The whole industry knew that. And yet we just kind of walked around like that was normal for an exchange to be basically monetizing its customers instead of protecting its customers, right? And that's really weird. When you look at an exchange, no other exchange was doing that. Bybit wasn't doing that. Like all the other top exchanges, they were not engaged in this game of they were making money and dumping tokens they invested into on their own customers. FTX was the only one where that was happening, which is okay. Look, it's not a moral statement. It's just weird. That's a weird business model, right? In the same way that like buying a bunch of stuff in the US when you have no market share in the US, that's weird, right? Binance spends a huge amount of money on marketing, but they do it in the geographies where they're trying to win market share and where their money is actually being made. Same thing with Bybit, right? All these exchanges were spending huge amounts of money sponsoring sports leagues, like doing F1, all this stuff, because it's international, because that's where their market share is. It makes sense. So anyway, all that is to say, was it possible to have seen this coming of FTX was a gigantic scam? No. Was FTX really weird? Absolutely it was. Absolutely it was.
I think we can all agree, though, that FTX Ventures is actually really good. They got Anthropic, they got Cursor.
Incredible returns. In retrospect, that really should be the story, is how fantastic investor Sam was.
Jordi, I think you tweeted about this at some point, but where do you think crypto would be today if Biden won the election? And do you think we'd be
Kamala?
better off or worse off? Oh, sorry, Kamala.
If Biden won the election,
Jeez.
I don't know. That'd be bizarre. It'd be like one of these Weekend at Bernie's type movies.
Yeah, exactly.
It's hard to like compare two things that are in totally different dimensions. Obviously, it would be a lot better in some ways and worse in others. We have like just like the extreme of pure capitalism at the moment, where and like this concept I bring up all the time of proximity to like the money printer and proximity to money, and this Cantillon effect, where you you just capture so much of, you know, being around the hose, and the people around the hose are, you know, I mean, I've heard stories of people on like the Trump meme coin, a lot of people making tens of millions, right? Like knowing about it, etc. So um, that's not great. On the other hand, them dropping, you know, lawsuits against fucking Kraken and Coinbase and Uniswap is very good. Now maybe they went too far. You see like Richard Hart celebrating his victory against the SEC as if he's like the Messiah. This guy's he's something else. So, you know, they're gonna, I think net is still good. Given like, you know, the extreme position of the Democrats, and I think what we have to do as an industry now, like, you know, people like us that are working in this industry, we have to try to create a situation where in 3 years it's not another, you know, either you know, you drop in the ocean, or, you know, you're in the fire. You hopefully the Democrats realize, you know, they can lose elections if they are so negative, and have some middle ground policy. And, you know, we don't get like Elizabeth Warren trying to punish the last 4 years of things, because, you know, I do believe that the largest issue of this decade is income inequality and wealth inequality, more specifically, and not income inequality. And, you know, crypto, despite the positive things we say about, you know, the fairness, and, you know, it's all about code is law, it's actually like very centralizing for wealth. You know, Bitcoin has this free rider problem I've spoken about. You just hold it and you make money without doing anything, and you know, there's like an incentive to just hold it. That creates a centralization of wealth. And as we, like, you know, get disrupted by AI, I think in 3 years, the Bernie Sanders type of, you know, uh, political philosophy is going to be strong. Now, it's populism on both sides right now. And hopefully crypto is not the bad guy. That's kind of what we need to do.
Oh, Jordi, this thing about it's centralizing of wealth, because if you hold it, you'll just make money by holding it. Why is that not true for any financial asset? Like, why is that not true for the stock market?
So when you're creating like a new form of money, and the money kind of is just growing at, like, you know, this huge pace, like a 2x a year as Bitcoin's been growing, and it starts to, you know, take over gold, it just becomes like this meaningful, like huge meaningful thing. um, the rate at which the early holders are growing their wealth is not really good for society. I mean, there's like this YouTube video of um, some guy that has like, you know, 10 billion of Bitcoin or something. It's like just some dude, and he just holds it. You know, if he starts owning like a trillion, and like the whole country is, you know, there's like entire continents that don't have that. That doesn't work, right? Like there's like this kind of force that's happening. And
Yeah, you need circulation.
yeah, and unfortunately, like, I agree with Larry, like the fact that there's no tail emissions is a concern I've always had, not just because of the security aspect, but also because there would be a little bit more incentive to have a velocity of money if there was some, even small 1% something tail inflation. It would just make the money move, and kind of decentralize it a little bit.
And Jordi and Haseeb, same question for you. Do you think that this gets solved eventually by just moving more DeFi activity on top of Bitcoin, and, you know, perhaps with OPCAT or with some other slight adjustment, slight soft work on top of Bitcoin, where, you know, you are allowed to then have a proper layer 2 functioning, and therefore creating economic activity, and therefore, you know, creating more incentive for the fees to actually adjust a little bit more and not be so reliant on the inflation? Like, do you think that's the viable path, or do you think we're going to have a really tough conversation at some point, you know, in 20 years about creating some inflation?
Yeah, probably 10 years.
Definitely
10
not 20
years,
years. It's gonna be sooner than that. But also, yeah, there's no way that it's gonna be people building Bitcoin L2s just for the sake of generating fee activity. Like, that's such a broken mental model of like how you create products that people want to use. Is that, oh, if you use this L2, you'll solve the Bitcoin fee problem. Nobody cares. Nobody is choosing their L2 on that basis. So I think I've heard this story so many times now of like, oh, you know, Bitcoin has got all these fees, and then the fees go to zero, and then it's, oh, you know, there's BRC20s, and then BRC20s go to zero, and then, oh, there's this thing, and those go to zero. So look, I think Bitcoin has got to solve this problem on Bitcoin's terms. No one's going to magically show up and like create a wellspring of demand to solve this problem for you. If it does, amazing. That's so wonderful if that does happen, but you should not assume it's going to happen. You should assume that you're going to have to solve this problem with a tool that you have, which is governance.
I mean, I agree with most of what Haseeb said this time. They're not going to choose it on that basis. It all has to be like making sense in and of itself. No one's gonna, take on the burden of I'm gonna fix Bitcoin and therefore I'm just gonna use this shitty slow thing. Now inadvertently, like, do we get a Bitcoin L2 or something that happens to be really good and solves it? Maybe. Yeah, I think there's like a 10-20% chance we get something like that. I think base case for me is we get into like a big Bitcoin fork situation.
Wait, hold on. Why would L2 solve this when like everyone in Ethereum is like, oh, L2s don't pay anything to the base layer?
I'm just saying, like, if you get a DeFi ecosystem that actually adds value to people and happens to be like used, and somehow is like creating fees for Bitcoin as a byproduct.
But it wouldn't, right? It would create fees for the sequencer.
But some of the fees end up going back to the base layer, and like a lot of people that believe in this believe that a lot of the if you believe in layer twos, a lot of the activity will eventually be on top of Bitcoin versus ETH because it's more simple, more
Fine, but it's just like we've seen from Ethereum, like this theory is just wrong, right? We thought that when the roll-up centric roadmap started, they're like, oh, the tariffs are like there's going to be these fees that the L2 pays as settlement tariffs essentially, and they just trend to zero, right? They just end up being almost nothing, even when the sequencers themselves are making a lot of money. I'm kind of like, how is that not the lesson?
I mean, it could be a fixable problem based on the parameters that you end up picking, right? Like ETH presumably made a mistake with some of that. They probably overestimated.
Right, but Bitcoin is never going to create like an L2 lane or have blob storage or something, right? The whole idea is that Bitcoin doesn't change, you change.
Yeah,
by creating an L2 on top of
I mean,
us.
we could talk about this probably for a long time. There's theories about like if there's one L2 and there's competing L2s, then you're competing for the block space. Therefore, the fees end up shooting higher, and you end up being slightly more reliant on those fees. I don't know, but I do know a lot of smart people, including Eric Wall, for example, who believes in this.
Yeah, I think it's going to be a messy governance-y type process where either one, you add a tail emission, or two, I think, to be clear, I think this is probably more likely, is that basically mining just becomes kind of pseudo-centralized. Is that, the mining fees are so low that basically mining just becomes kind of a public good, that like Coinbase is mining and Binance is mining and BlackRock
Like
is
Tether
mining
and
and Tether is
Bitfinex.
mining. And they're mining just to like secure the
Yeah.
network. And they all kind of agree, look, if China ever shows up and starts maliciously mining blocks or whatever, it's probably not even China, it's probably like some, hedge fund or something that starts mining blocks to like, mine empty blocks and kind of DDoS the network, that we all kind of agree we're not going to acknowledge their blocks, and we're just going to build on our chain and ignore the longest chain rule if we see a malicious actor. And so my guess is that that's probably how this gets solved, because the political will to actually introduce a tail emission will just not materialize.
I agree it's not going to materialize anytime soon. I think it only which is why I don't talk about it or spend any time, getting people to talk about it, because it'll only like be possible when you see the whites of their eyes. You need to be close enough where you're like, okay, we're actually
Yeah.
close to getting, it's like the thing with global warming, like nobody does anything unless they, it's happening in front of you, and then you start taking it seriously, and then you say, okay, let's try different stuff. The one thing that I realized recently is the only thing you can do wrong to like screw yourself over is you start like selling the forks. There might be like different forks, because you kind of like need to fork Bitcoin to do this stuff. And if you just say like, oh, look, here's like $1,000 if I just sell this one, and then that ends up being like the new agreed one. So you just have to like not unless you're like sure that this one's a scam, like 100% sure, like this one is gonna rug, then sell it. But generally, just hold your Bitcoin, and you'll acquire all the versions of Bitcoin, because you'll get all of them, and then you can wait and see. So just don't sell the fork.
Haseeb, are you worried about AGI? Are you worried about the role that crypto could play in some sort of an AGI Cold War that we could have between countries?
Am I worried? I don't know that I'm worried. I think it will play a role in that AIs naturally will want to use crypto because crypto, relative to normal money, like money in a bank account, AIs are not going to be able to get bank accounts, especially if they're a rogue AI or some kind of sovereign
Yeah.
AI that's acting in some autonomous, malicious way. That AI is not going to be able to open a JP Morgan account. It's not going to be able to pay KYC, pass KYC. It's I mean, nobody even knows like how do you tax an AI? What jurisdiction does it pay taxes in? How does any of this stuff work? Nobody really knows. But crypto doesn't ask any of those questions, right? Crypto was in effect made for machines. So I think crypto is going to be the natural answer. And it's not clear to me that this is a good thing. I think it's quite likely this is a bad thing. Is that what you'll likely see, and I've written about this before, is that in the future, like a huge amount of scams are just going to be done by AIs. Not even by humans using AIs, but literally just rogue AIs operating on their own, right? So you can imagine, like basically the equivalent of an AI virus, which is that it's some model that becomes malicious and decides to escape whatever its original container is, and then just goes and like buys compute on, Render or Akash or something, and now it owns its own GPU. Well, it needs to pay for its own GPU. How does it keep itself alive? The answer is that it needs to make money. How does it make money? It goes and scams people, and so it goes and creates a Twitter account, and it goes and buys on the darknet market some stuff so it can pass KYC, so it can get into Twitter, have a phone, have a this, whatever. And then it just starts doing romance scams and putting up fake DNS things and hacks curve like we just saw yesterday. And it's just like, great, now I've got some crypto. I can use that crypto to pay for myself. I can replicate myself onto other boxes, and this thing just like keeps expanding and keeps scamming more and more people. And the reason why this is actually in a way like kind of optimal is because there's all these stories about these like these Asian scam farms that just exist in some of these countries that are just kind of in the middle of nowhere, like fucking Uzbekistan or something. There's just like these complexes where people just scam people full time, and the problem with these is that they get busted sometimes by law enforcement because they suck and everyone hates them. But when it's all AIs in the cloud, it's just like you don't know where they are. How do you bust that? Like some box somewhere on Render is running a bunch of romance scams. And how are you ever going to find it? Like the answer is like they just exist out there in the ether and they're just kind of polluting society as this kind of background radiation. So I think that's actually very likely, and that's all going to be facilitated by crypto. In a sense, they have comparative advantage when it comes to scamming because they can't be busted.
Yeah, I mean this time I'll take like the worry seat. I'm quite worried. Mainly, of course, there's all the tail risks, the catastrophe risks. The base case, though, even without those tail risks, is that we have to like redesign society, and that can be like a very difficult and violent situation because the philosophy that we currently have around what we tolerate, don't tolerate, why we're kind of relatively at peace with each other, and we kind of get along with our neighbors. There's a certain social dynamic that causes it. Um, you don't know where the next genius is going to come from. The next brilliant inventor, literally right now in the world, comes from anywhere. Like unexpected places. These things create a social contract where we will take care of sick family members because they matter to somebody who might be somebody. Like there's these underlying social fabrics, and they're going to get frayed by a lot of the changes that AGI will bring. And uh, a lot of like the smartest kind of AI guys have been talking about how we're going to need a lot of philosophy soon. Like Demis was saying, we're going to need like amazing philosophers for the next like couple decades, because we just have to like rethink things and find um like beautiful like equilibria that are still peaceful and positive. And these people out there who think that we're gonna get this like post money world that's just gonna be like post resources, and we're just gonna have to like do art all day because we're not gonna need for anything. I think actually like money, the concept of like money and like a way to track resources is going to be more important than ever in this world. It might not be the exact type of US dollar. It might be some kind of compute money or intelligence money, but actually like resources will matter even more. Um, and yeah, it's not going to be all I think there's a lot to figure out.
Are you guys accelerationists, or do you think we should kind of pause, slow down, and figure out what's going on?
I'm neither accelerationist nor a pausist. I'd say I'm pretty sympathetic to Vitalik's DIAC manifesto, which this is a while back, but he described acceleration of defensive technologies, and the AI is kind of dual use. It can be used both offensively and defensively, but there are ways in which you can cognize how to think about what would it look like to accelerate on AI in positive use cases while still maintaining very strong AI safety and so on, but not accelerate on things like biotech or things like gain of function research, which I believe Trump just banned, which of course was potentially one of the causes of COVID. If you just say accelerate everything, I think you do end up in some very dangerous equilibria.
Yeah, I meant more so in regard to AI.
With regard to AI, look, I think the reality is that there's no choice, right? Like we
I
are
agree.
accelerating.
You can't
Like
shit.
it was possible a few years ago when it was basically just OpenAI and Google to say, okay, guys, let's take a breather. But today there's so much stuff that's open source. You've got DeepSeek in China. You've got now like 4 or 5 labs that are all competing for the best models. There's no way to pause unless you get like basically world governance level coordination, and that is just we can't even decide on tariff levels, so we're not going to decide on stopping a technology race.
Yeah, I recommend you guys. Have you guys heard of this AI 2027? It's a pretty interesting
I read it.
experiment. Yeah, if whoever's listening to the pod, highly recommend giving it a read. It is written by a bunch of AI researchers from OpenAI as well as a couple different institutes. Really gives a unique perspective on like the role of AI in the next 10 or so years of our lives.
Yeah, I think this piece is a little too optimistic about the rate of capabilities improvement. And this, there's a lot of people I know who are projecting that like, 2028 is when we're going to get AGI. Or some people were saying beginning of this year, that end of this year, we're going to get AGI. I think in retrospect, having seen the latest batch of models from OpenAI, Anthropic, and Google, I think what's very clear increasingly is that we have more of what people are calling this jagged frontier, which is that models are getting very, very good at certain things, but they're actually not generalizing all that well, right? They're very, very good at coding. They're very, very good at math, and they're not getting that much better at other things, right? They seem to have plateaued in a lot of other domains. So like, even though we can now solve Olympiad level math problems, models still can't order you a pizza, and we're trying to get models to be able to order you a pizza, and the agentic models are still falling over. So is there going to be a breakthrough in the next couple of years? Maybe. It's obviously hard to say that we can't, but what I've seen is that most of the people who are furthest in this field are actually lowering their expectations about when we're going to get full general intelligence and labor automation.
Haseeb, is the new O3 model better than an entry-level analyst at Dragonfly at picking whether to invest in something?
Yes and no. It's better at certain things, but worse at others, right? And that's what I mean by the jagged frontier, is that it doesn't uniformly dominate a human being. There are things that O3 will reliably get wrong that human beings will just be much better at.
What is that?
I mean, one of them is just like taking a bunch of input and actually making an investment decision, right? So like if you just want analysis of like, take all the data that's out there and just like give me the output, as opposed to, tell me how does this fit into my portfolio construction? And like, is this actually a good investment or not? The thing that you see with O3 is that, of course, it's scraping the internet. And there's a lot of data on the internet about what these crypto projects do, about their metrics. I mean, it can't read Artemis or something. So that's another problem, is that it doesn't have the ability to like be multimodal in its exploration of data. But fine, maybe that's good enough. It can like just kind of read a bunch of articles and summarize those articles for me. That's helpful. But the question is not how well can you analyze the thing. The question is, okay, do you get the sign right at the end? Which is, should I invest in this or not? The thing you see with O3 is that it's very credulous. Why is it very credulous? It's credulous because the internet is full of credulity, right? You go read an article and like every fucking article you read is like breathless, like, oh my God, IoT blockchain is going to change the world and this thing is automating all infrastructure and supply chains are going to be solved. If you just read the internet, that's what you'll think is happening, right? And the reality is that's not what's happening. You and I know that's not what's happening. So you have to approach this thing with a lot more cynicism than the models have, because the models weren't trained to like,
Yeah.
Do any of this stuff. They weren't trained on like hanging out with crypto people. But if you were trained in hanging out with crypto people, which is what analysts do, they kind of know, they get the vibe,
Yeah.
But O3 doesn't know the vibe because all it's doing is reading, blog posts.
The really funny thing that I found in using O3, and obviously the block is always evaluating like, can we use this, to make our work better, and it cites Cointelegraph like 80% of the time when you ask crypto questions, and and I'm guessing it's because they have the best SEO in the industry, but they probably have arguably the worst content. But I think it gets back to your point, which is it doesn't have access to the best.
If you think Cointelegraph has the worst content, you have not seen.
Okay, right.
Some of these articles out there.
I mean, out of the top like 10 media companies, maybe, but it has insane amount of traffic and it gets really well scored on Google, and I'm guessing that's why it ends up picking Cointelegraph over, like, let's say, even CoinDesk. But I agree with you. Currently, it's unusable. But I think once it gets even more access to the information and becomes slightly more cynical, it's not that far away from my perspective. We're probably talking
here's
about
the
like
thing:
a year away.
this is why I think it's important to have a good mental model of how these AIs learn. I don't think O3 is going to get more cynical about crypto. Now, why is it not going to get more cynical about crypto? Because how are you going to give it the training data to make it cynical about crypto, right? The reality is that where would you learn that? You would learn that by just
Twitter,
sitting around
maybe.
reading Twitter all day,
Yeah.
or like hanging out in Discords, or actually making investment decisions, right? If you trained a model on all of the internal documentation and all the Slacks of every crypto VC, then I think you would be really smart, right? Then it would learn the kind of judgment that crypto VCs actually have. But it hasn't learned that. All it's learned is what's on the internet. And what's on the internet is mostly written by projects.
Yeah.
Right? It's all SEO'd stuff that's like the sort of slop that they're putting out to try to advance their own agenda. So the AI learns that. And the AI is always going to learn that. It's not ever going to learn what is ultimately mostly in private spaces. So this is why if your domain, if your job primarily functions on public data, you're fucked. The AIs are coming after you and they're going to learn your domain better than you know it. But if your job is mostly learned on private data, you're going to be in business for a very long time because the AIs, they're simply not going to learn this. They just don't have access to this training data. So that, like, if you don't understand that mental model, you might just think uniformly all jobs are going to get replaced and we're all fucked. But that's just not true. Like it really is the case that, investing, and it's even true for trading, there's a lot of private data that's just not out there that we have learned. Like I have learned, Jordi has learned, that the AIs are not going to get access to. Like maybe we could fine tune our own models, but it'd be pretty difficult to actually get the quantity of data necessary for them to actually get that good at it. And so this kind of private information, these jobs are going to persist much, much longer than for other kinds of jobs that are like, public equities analysts. Like those are going away, tomorrow.
Jordi, how quickly are market makers fucked if AI keeps progressing at the same pace as it has been over the last 2 years?
Not that quickly. I agree with Haseeb. I'm not worried personally. I feel like I'm, near the top of the mountain. The flood is coming, but I'll, it'll get me eventually. But like after other people, because it's like
No. The answer is that you're going to automate more and more people within your firm, right? It's not going to get you.
Yeah. I mean, there's always stuff for people to do, but I think the key thing is like there's always a need for judgment because intelligence at the end of the day is making decisions, just a series of decisions, and if you have like a low error rate, those decisions compound massively, and judgment is built, with things that are not just scraping the internet. There's a lot of other parameters, and private data is like, as Haseeb said, it's not just private data that's like digital private data. I mean, there's meat space private data, like there's
Exactly.
conversations that are had in person or things that happen. They're not digital, they're not digital in nature. So yeah, not too worried. Although I do think, we've been doing AI in the sense of like optimizing through machine learning some optimization function for, much more than 10 years now. So it's just going to be a stronger version of that.
One more thing I'd add to that is that it's not beyond just the private data. The other thing to recognize is that if you look, for example, at chess is an interesting analogy of this. So the best machines are obviously way better than the best humans at chess. That happened a long time ago. But it's also true that centaurs, meaning a human being with a chess engine, is actually worse than just the chess engine. Now this is true in chess because chess is a domain one that's perfect information. It's very easy for AIs to optimize over this. But also is that it's one of these domains where AIs are strictly dominant over humans. There is literally nothing that humans are better at than AIs on chess. The world in which there is nothing that you are better at than the AI is going to take much longer than the world in which AI is actually a better net investor than Jordi is, right? It may well be that in a world where an AI is a better investor than Jordi is, but Jordi is still better at something, right? Now, maybe the AIs don't care. It's like, oh, well, that little thing that you're good at is not very important relative to what I'm at. But the law of comparative advantage says that it's better for Jordi to do a deal with an AI than for the AI to replace Jordi, right? And so what you will see is basically these centaurs where it's a human being with an AI. The AI is superpowering the human being on the things that the AI is better at, but the AI will never be, or not never, but for a long, long time will not be as good as human beings at certain things, right? And you see this, for example, with robotics, is that robotics, we're way, way behind where we are in reasoning, right? Reasoning, we're blowing human beings out of the water. We're improving really, really fast. Robotics is slow as shit, right? And so it's very likely that, again, you're going to see a lot of centaurs taking place where you've got a human being with an AI telling it what to do, right? It's got like an AI in your earpieces instructing you what to do, but the AI doesn't have the dexterity to be able to actually physically do it, right? And that'll be true for a very, very long time. That robotics is just way harder than actual AI and machine learning. In the same way, for a lot of stuff like investing, it may well be that, look, this judgment thing that Jordi has and that I have, it's just really hard for an AI to learn that. But it's very easy for an AI to just quickly synthesize information, analyze a white paper, do due diligence, like research all the team's backgrounds, even just like look somebody in the eye and see, look somebody in the eye and see, oh, do I see any micro expressions that they're lying to me? Maybe an AI will be better at that than I am, but I will always be better at something relative to this AI, which means that the optimal outcome is that I have an AI riding sidecar with me, and that combination is be better than just a pure AI, which means I'm not getting replaced.
So guys, we have a closing segment here. We've been chatting for an hour already, which is called Fuck Around and Find Out Onchain, where we ask you guys about what has been the most recent thing that you've been fucking around with on chain. What are some protocols that you've used? What is something cool that maybe not that many people know about so far, where you feel like it's actually innovating? And we can start with Jordi here.
Let's start with Haseeb. I need some time to think what's been innovating online.
Haseeb, is there any protocol or anything that you've been fucking around with that you find either cool or groundbreaking or just stupid but interesting?
Yeah,
not AI related.
Not AI related. Crypto related. Yeah. So we were just playing around with Noise, which is one of the applications on MegaETH testnet. Noise allows you to basically trade themes or individual applications that don't necessarily have tokens or even potentially are never going to have a token using Kaito like social data. So you can basically it's effectively like a derivatives market on future Kaito social data, which is a really cool idea. It's obviously still in testnet, so it's not real money. But this kind of idea of like derivatives on everything and being able to trade concepts and themes, you can see from the rise of prediction markets, there's more and more interesting different kinds of things that will be traded and that people can bet on beyond just, who's going to win the sports game or is this stock going to go up and down? Being able to tokenize effectively everything and be able to express views on it financially, I think it's a super interesting trend, and Noise is one example of that.
What are you trading on Noise? What are you long and short?
I didn't actually long or short anything. I was just looking at the markets and playing around with it. But I was. Go ahead.
Aren't you worried that if there is no money behind it, anything that is underlying can be gamed, like including Kaito? Like my worry with like derivatives,
they will totally
on everything is that like once you create some financial interest, if there's enough open interest, like it will be game hard as shit, right? Everything in crypto 100%. Is being gamed, including TVL, like everything basically, right? So
yeah. So I agree with you. This is a problem. To be clear, this is a problem with derivatives of financial instruments, is that those can also be gamed, right? Like you can go open a short and then, go fudge something. You can, go long and then, pump it on the spot market. So that is always going to be true for everything forever. The question is how manipulation resistant is the underlying, right? And how costly is it to move it? If it's really cheap to move Kaito social data, then, okay, this market is going to fall apart because it's just going to be really, really easy for anybody to manipulate this market. Spreads are going to be super wide because nobody's going to be willing to give you liquidity on this thing because of the risk of manipulation. I think the answer in some sense falls on Kaito, which is that it's already a massive incentive to manipulate Kaito social data, right? Not because of some fucking noise position, but because people want you to think that their token is doing really well. Like they're already trying to manipulate X all day long, right? Because that's like the battleground. That is what they're spending all their marketing money on, is to get their social data up. So I think Kaito is in this adversarial game with the manipulators already. To be clear, I think that is going to affect spreads. It's just the fact that there are going to be people who go in and like, I'm going to start a social campaign right now, or I'm going to like create a bunch of bots and have them do this thing. But I think Kaito will be able to adapt to it. And if they can't, they'll adapt to some degree, right? If they can't, it's going to reflect itself in spreads, which is unfortunate, which just simply means that the betting is probably going to move toward bigger categories.
Yeah.
So moving towards something like, okay, how much of the conversation is about AI? How much of the conversation is about DeFi? How much of the conversation is about, this is one of the things that Kaito already measures, is these different trends of social sentiment. That may be the place where most betting concentrates if these individual smaller themes end up getting too easy to game.
I personally what I'm excited about for Noise is less trading trends in crypto and more just trading trends in like general life, right? Like I think the way I always pitch Noise is like skinny jeans versus baggy jeans, right? Baggy jeans have been in fashion for the past couple of years, but I'm hearing in some like, deep parts of like communities that skinny jeans might be coming back. How do you represent that for like that opinion, right? Like Met Gala happened a couple days ago. I wonder who is the best performing like new designer out there, right? A way to kind of illustrate trends with like fashion. I think that's a really large market that's just waiting to blow up. So yeah, I'm also excited about Noise. How about you, Jordi?
Yeah.
What are you doing? You got a couple minutes.
Yeah. So
You gotta have
yeah,
enough.
I think Jordi was clicking around, trying applications right now, so we could talk about them.
no, yeah. So I haven't clicked around on chain, but fucking around cognitively. Yeah, a few weeks ago, I was chatting with my friend Dave White at Paradigm about his idea, which he published a few days ago, multiverse finance. So this is like fucking around, like you're finding out here. So basically, he's kind of realized that you can start creating financial markets and like economic systems around conditional events. So let's say you guys were asking before, what have happened if Kamala won the election instead of Trump? Now it's one thing to do it retroactively, whatever. But if it's in the future and there's uncertainty, and you want to start making decisions, but it'll really affect your world. What will happen? So you can start bidding up ETH, but it's only gonna matter if it settles that like Trump won the election, and so you can have this like specific thesis that you can cleanly play out. Now, these things are hard to get liquidity for because and there's not many events apart from presidential elections and things like this that are impactful enough and has enough like concentration of people looking at the same event. But as a concept, I think it's extremely interesting, and maybe like there will be some use case for it.
Is there like a parlay system baked in there to try and aggregate liquidity?
I mean, I think right now it's just a white paper and waiting for people to try and build different things. But theoretically, you could parlay different things. You could say like, if the Oracle says that true, Bitcoin is above 100K end of year, where do I think these other coins are going to be versus if it's under 60K, and then you can start betting on that stuff. I think like looking at it from a speculation standpoint is actually easier to create liquidity rather than like looking at it from like like a prediction market situation, because Dave was saying, oh, you could have like an Aave in the lending market that only applies to, but it just seems like too hard to it just gets too fragmented.
Thank you guys so much for joining. Thank you everyone for tuning in. If you guys want to learn more about what we were talking about, you can read the show notes. And if you enjoyed this conversation, please make sure to subscribe for more. Again, thank you guys for joining.
Excellent. Thanks, guys.
Thanks.